Coming up on today's program, global markets surge as Biden becomes U.S. president-elect. Ugandan government to spend $20.7 million on industrial and business parks to create 2 million jobs. Plus, Reserve Bank of Malawi reduces MPR to 12% from 13.5%. Many thanks for joining us on Business Incorporated. I am BC Adebayo. Let's begin the show with intraday numbers. And it's safe to say that African markets joined their global counterparts in reaction to Joe Biden's presidential win, as major markets for track were all in the green at intraday. Nigeria's main index jumped 3.16%, while South Africa's GSE advanced 1.2%. In Egypt, the EGX 30 traded higher by 1.13% at intraday. Kenya closed positive on Friday. And it's a similar case of positive sentiment in the Middle East. Dubai's main index posted the highest gain of 1.75%, while the Abu Dhabi index added 0.65% at intraday. Elsewhere in the region, Saudi Arabia's index advanced 1.57%, while the Qatari index was up 1.32%. And in Europe, it's the same story. The markets are tracking their global counterparts as investors continue to react to Joe Biden's defeat of incumbent Donald Trump in the U.S. presidential race. Let's get more details from Chelsea Delaney. Good afternoon, Chelsea. So finally, we have some clarity for the markets after last week's nail-biting U.S. election. How are the markets in Frankfurt actually reacting to Biden's victory?
It's been a huge day for global markets. We had already seen pretty significant increases in stock markets across the world starting last week as it became a little bit more clear what the outcome of the election would be. Many traders, many investors are looking at the U.S. election outcome really as the Goldilocks scenario, where we're likely to get a much more stable president who gives businesses a much more clarity on what policies are going to be like. But at the same time, because Republicans are likely to keep control of the Senate, it will most likely mean that President-elect Biden wouldn't be able to pass some of the very progressive parts of his platform, things like tax increases or very strict environmental laws that had been worrying investors a bit. So the outcome of the election has been very positive for stocks, but we've also seen this rally really supercharged over the past hour after we heard news from Pfizer and BioNTech, two pharmaceutical makers, that they have made a lot of progress on their coronavirus vaccine. They have said that their vaccine is about 90% effective, and they do expect to submit it to U.S. regulators by the end of the month. So that has really bolstered this optimism that we could be getting back to a state of normality quite soon with this vaccine in hand.
All right, now the EU is already ready for a Biden era with the bloc's trade ministers meeting today to plan a reboot of trade relations with the U.S. What could that look like? What are you expecting from your end?
We've heard a lot of comments from EU officials over the past couple of days since Biden was declared the winner of the election about how many EU officials do want to see relations between the U.S. and the EU improve. Obviously, under President Trump, we had seen this relationship really hit a new low. We'd seen billions of dollars worth of tariffs slapped on each other's goods. There had been a lot of threats going back and forth. So there's certainly a lot of optimism that with Biden in the White House that we could see friendlier relations, that this would ease some of these trade tensions. But at the same time, the EU and the U.S. still have a lot of long-standing issues. And we've seen this just today as the EU says it's actually going to go forward tomorrow with about $4 billion worth of tariffs on EU goods. So they're certainly not backing down from some of these long-standing trade issues. And there's still a lot of discrepancies on each side over what they want an international trading relationship to look like. So I think even though we might see a softer approach to trade and to relations, there still are a lot of issues between the EU and the U.S. on trade.
Oh, just before you go, Chelsea, let's quickly check in on the coronavirus situation in Europe. Of course, the numbers have been surging despite the lockdowns across the continent. And Germany last week surpassed the 20,000 daily infections for the first time. Is there any sign that a second wave is slowing?
I don't think we've seen really yet the turning point for Europe and these second waves that we're seeing across the continent now. Many countries are now back in lockdown, including Germany. But what officials have said is that it will take a couple of weeks to see if these measures are actually having any effect and whether they've been successful. In the meantime, we've seen many countries, including Germany, as you mentioned, continue to post record increases, and this has put really a spotlight on the healthcare systems across Europe. Many are starting to reach the capacity of what they can do. We've seen hospitals in Belgium, for example, having to ship patients to Germany, to other neighboring countries, because they've really run out of beds. Here in Germany as well, which has been highly praised for having a lot of intensive care beds, a lot of respirators, a lot of equipment to deal with very sick patients. We also are seeing a very significant increase in intensive care patients. Over the past 10 days, we've seen the number double, and we are getting close to the capacity available. So there's certainly a lot of concern about the resources of these healthcare systems being stretched, but hopefully, and many officials do hope that soon, that these lockdown measures that have been in place will be enough to turn the tide.
We hope so too. Many thanks, Chelsea. Do enjoy the rest of your day. And now let's see if the Biden frenzy is still dominating market activities in the UK at intraday. And Juliana Olayinka will be telling us how that is going. Good afternoon, Juliana. Tell us, is Biden's victory still fueling market rally at intraday?
Little bit of breaking news, and this is for COVID-19. We actually have an announcement from Pfizer, which is an American pharmaceutical giant. They've actually said in a statement, and apologies, I'll have to read from my phone here, that they have done a vaccine, and today is a great day for science and humanity. The first set of results from our phase 3 COVID-19 vaccine trials provides the initial evidence of our vaccine's ability to prevent COVID-19. Now, this is a major global news story, a global economic news story. It's actually completely overhauled the FTSE All-Share, which was doing pretty well at early trading because of Biden's historic victory. But now, with this announcement that indeed a COVID-19 vaccine has been found, which has exceeded scientists' expectations. So I was going to report that the FTSE All-Share was up by about 1.26%. But before I came into the studio, the FTSE All-Share was actually up by over 5%. All of the travel-related stocks are going up. BA, IAG, the owner of that, EasyJet, Ryanair, all of their shares have gone up. Of course, all of the pharmaceutical giants are up. Oil as well has risen sharply on the confirmation of this. Of course, the world has all been waiting for a vaccine, and it does appear that the third phase of the Pfizer COVID-19 vaccination trial has proved successful. So I'm sure there'll be updates on this later on in the channel. But that has completely changed global markets, and we are expecting the S&P and the Dow Jones, when they open much later, to be open on a record high.
What a way to begin the week, Juliana. I mean, some good news after all this while. But let's talk Brexit now. The EU and UK officials have resumed trade talks in London as the start of another key week for negotiations. Tell us how that is coming up.
Well, it's difficult to say, isn't it? There's been so many backwards and forwards with Brexit negotiations. They have kicked off. Michel Barnier, the EU chief negotiator, did arrive in London last night, again reiterating what he's been saying over the past couple of weeks, that a deal can still be done. But there does remain contentious issues on both sides. One about competition and market entry. The other is about fisheries. Now, Prime Minister Boris Johnson was speaking to British media yesterday. He also reiterated reiterated what Michel Barnier said and said that a deal could be done in the next couple of days. But he insists that if a deal isn't done, then that Britain will be ready to leave the single market and the customs union at the end of the year and fall back automatically into World Trade Organization arrangements. And now the Internal Market Bill is back in the spotlight today. That is that controversial piece of legislation which will interfere with the withdrawal agreement, which is been enshrined in international law. Now it has passed the second reading in the House of Commons, and today it will sit in front of the House of Lords. We're not expecting it to pass the House of Lords. Very senior Conservative ministers and peers have said just how disappointed they are with Boris Johnson for deciding to rip up the withdrawal agreement. And if it doesn't pass the House of Lords, MPs have been speaking to British media this morning, and they said it doesn't matter, that they will still put it through legislation. So as Boris Johnson is trying to find his feet with the Biden administration, when they're expected to go on a phone call at the end of this week, perhaps the Internal Market Bill and the Northern Ireland Protocol will be one of their top conversations.
We'll wait and see. Now, surveys of business activity show that the UK faces pre-Christmas slump on the back of new COVID restrictions, despite government measures to protect businesses. Here we go again, Juliana.
Here we go again. Britain is facing a pretty difficult couple of months. We know this because the Bank of England last week, the Bank of England Governor Andrew Bailey was pretty clear in saying that he is expecting a double dip recession. We do have GDP figures coming out for Q3 later this week. We are expecting to see a record growth in the quarter, perhaps between 15.8%. But, of course, this doesn't take into account these new restrictions. England is in a lockdown. Various parts of the UK have their own lockdowns and restrictions. And with the hospitality sector and with retail sector closed, it is going to be a difficult couple of months. The golden quarter, as it's called, the fourth quarter, is when we see lots of people going out, spending their money, congregating at some of these really big, famous events that Britain is so notable for putting on. But that isn't the case this year. We are expecting there to be more job losses, even with the extension of the job retention scheme. Unemployment in the UK currently stands at about 4.5%. It could increase to about 7.5%. And the survey that The Guardian were mentioning just really hits home just how difficult it can be for some businesses and for some people who are likely to lose their jobs.
Thank you, Juliana. Do enjoy the rest of your day. Moving on now, stocks in Asia Pacific were also up on Monday as investors in the region reacted to Joe Biden's victory in the U.S. presidential race. In Japan, the Nikkei 225 jumped 2.12% to close at 24,839.84, while the Topix index added 1.41%, ending its trading day at 1,681.9. South Korea's Kospi also rose 1.27%. Mainland Chinese stocks also saw robust gains, with the Shanghai Composite up 1.86%, while the Shenzhen Component gained 2.188%. Hong Kong's Hang Seng Index advanced about 1% as at its final hour of trading. The shares in Australia were also up, with the S&P ASX 200 gaining 1.75%. And in the U.S., where it's all happening, stocks were set to continue the big post-election rally as futures rose in early morning trade. On Monday, futures for the Dow Jones were up 1.44%, as you can see on the screen, and that implied an opening gain of about 318 points. S&P futures and Nasdaq 100 futures were also trading in positive territory. Still to come on the program, a look at the implications of the Ethiopian crisis for the economy. Do stay with us. Welcome back. The row between Ethiopia's federal government and the Tigray region has been in the news lately after a regional election was held in defiance of the federal government. Ethiopia is the second most populous country in Africa with 110 million people. Now, there are actually fears that the instability in the country could destabilize what had been one of Africa's most promising economic development stories. The associate practice lead for Sub-Saharan Africa at Docker Frontier in London, Matt Kinniger, joins us now to discuss the implications of this. Good afternoon, Matt. Thank you for joining us on the program. Now, what are the origins of the conflict, and is there a risk of a full-blown civil war that sees Ethiopia breaking apart?
Yes, well, thank you for having me on the show today. This is an extremely complex issue in Ethiopia, and it stems from the desires among Ethiopia's very diverse regions wanting to assert their autonomy in accordance with the 1995 constitution. But these are counterbalanced by the central government's desire to stress national unity and prioritize policies that stress national unity. This most recent escalation in tensions was triggered by an illegal referendum that was held in September. And the pace at which things are moving is quite worrying. So it is quite a rapidly developing situation. It's difficult to see how this pans out, really, over the next couple of months or couple of weeks, actually, because news and communication out of Tigray has been cut off. But really, the outcome really hinges on the extent to which the Tigrayan government or the Tigrayan people resist the armed intervention by the central government. Our base case is that it won't result in a nationwide civil war nor a breakup of the country, but it could. It's a very fast developing situation, and things could spiral out of control.
Now, given the disruptions caused by the coronavirus pandemic, what will be the outlook for the economy in 2021? And does the rise in regional tensions actually jeopardize the country's prospects?
Yes, so we don't think that this conflict presents an immediate threat to the economy, and this is provided that it doesn't result in a nationwide civil conflicts. And this is because most of the economic activity is centered around Addis Ababa and the corridor to Djibouti. So that's the main transport corridor. And we don't see this recent increase in tensions affecting those areas. Our base case is that the economy will avoid recession this year and continue to grow next year at around about 4.5%. And this will mainly be driven by infrastructure development by the government. So the construction industry will really benefit. However, we do think that this rise in tensions could delay the liberalization of certain sectors. So the government is trying to reduce the role of the state in the economy. Say, for example, it was looking to privatize the telecom sector. And this is likely to be delayed over the coming months because the government is focused on solving this political crisis. So this could result in less foreign direct investment into certain sectors into the economy.
But apart from the rise in regional tensions, now, what other factors affect the operating environment should businesses monitor over the coming months?
Yeah, so this rise in tensions is only one thing that businesses need to be concerned about. There are longer-standing challenges that businesses will need to deal with over the coming year. So one is foreign currency shortages. Recently, the government has announced that fuel will be removed from its priority list of products being imported. Now only pharmaceutical products remain as a top priority for accessing forex. So access to foreign currency is difficult. Inflation is forecast to remain in double digits in 2021, so we're expecting a rate of 17% next year. And we are also likely to see a delay in the coming online of the Grand Renaissance Dam, which was meant to increase power supplies to Ethiopia and spur economic development. And this is because of tensions between Ethiopia and Egypt. But we don't see this happening before the end of the year or early next year, and this will mean that access to electricity will be difficult for the foreseeable future.
All right, thank you, Matt Kinniger, Associate Practice Lead for Sub-Saharan Africa at Docker Frontier. Do enjoy the rest of your day. Well, moving on to other stories now. The Ugandan government has announced plans to spend 77 billion Ugandan shillings or $20.72 million on 29 new business industrial parks in different parts of the country. This will bring the number of industrial parks in Uganda to 32. The country's Minister for Investment says the parks are expected to create 2 million jobs and priority centers, as well as create both backward and forward linkages in the priority sectors of the economy. The investment profiles will focus on agriculture, tourism, infrastructure and services, minerals and extractives, and human capital development, among others. The Reserve Bank of Malawi has reduced the monetary policy rate to 12% from 13.5%. The central bank governor, Dr. Wilson Banda, says the Monetary Policy Committee noted that headline inflation has been declining since January 2020 and inflation outlook appears favorable. According to him, headline inflation has declined from 11.5% in January to 7.1% in September 2020 to lower food prices compared to 2019. The governor adds that non-food inflation remains low and stable, anchored by stable exchange rates and energy prices. He also noted that the COVID-19 pandemic has affected gross domestic product for the country from the projected 5.1% to 1.2%. Tanzania's Dar es Salaam Stock Exchange has lost over $43,522, equivalent to 100 million Tanzanian shillings on its market capitalization since post-election. The DSC recorded a total market cap of $6.43 billion in November the 5th, down from $6.48 billion recorded one day before voting on October the 27th. However, the market bounced back on November the 2nd when 107,382 shares were traded in 28 deals and 8 deals for bonds. And just before we wrap up the program, let's check out prices at the gold markets. Gold firmed up today as well, boosted by a weaker dollar and hopes of more coronavirus stimulus measures under U.S. President-elect Joe Biden. Spot gold was up 0.3% to $1,956.57 an ounce in early trade, while the U.S. gold futures gained 0.3% to $1,956.60 an ounce. Silver rose 0.7% to $25.77. Platinum gained 1.2% to $899.49, while palladium fell 0.4% to $2,479.81 an ounce. And that's where we wrap up today's program. Thank you for watching. I am Bisi Adebayo.